Hey, thanks for tuning in. In this video, we're doing a weekend review and a month-end review for the month of December and the year of 2021. You're looking at a chart of the S&P 500. This is a monthly chart going back to 2009. Every dip on the monthly time frame into SMA 10, SMA 20 was the buy and ultimately led to new all-time highs. Starting on this chart to point out a couple things. One, how momentum precedes price. So this momentum thrust here, where we exceeded like a previous high, the 2011 high and the 2013, right? Relative highs, relative peaks, really led to this huge run. Same thing's happening here. The peak in 2018, right, was not exceeded in 2020. There was your divergence, and that divergence was taken out, even going back to 2014. So when I look at this as wave 3. It's just how it is. So we're in the process of putting in, a wave 3 type of move. And that still means there's a wave 4 and ultimately another wave 5. So there's no mega top coming soon, but you are seeing pullbacks into SMA 10 continue to get bought on the monthly time frame. And that's really all I wanted to point out, and that is at 436. So what I see happening is that inching up, $5 a month or something like that. Watch for that to get tagged, and possibly even SMA 20 come into play in the year of 2022. So those levels, just constantly keep them in the back of your head, will be of note. The weekly pattern, I brought this up probably going back to here, maybe March, April. This is an ascending channel. This little move down here, if you take the move, that's what this rectangle represents. Once you get above this high and you get acceptance above this high, the profit target becomes really just the high to the low here, inverted. So that gives us about 525. And this channel, right, she can just do this as long as she wants. She stayed in an ascending channel in an uptrend above the 20 on the weekly the entire year. One thing I will point out is that we do have an obvious bearish divergence on the weekly that is not present on the monthly. That's why I started with the monthly. The monthly chart is in charge. It is why you see every dip get bought and every bear break on the weekly just ultimately end up in another bullish pattern. That being said, we've got a nice little bullish divergence as well. And if that breaks the bearish divergence, this thing could come back up and retest 4 on the PPO right now that it's reset to 2. Ideally, we get this thing back down to 0, if not negative. Those tend to be the best buys. Also want to point out that, during these periods of larger consolidation, 2018 to 2020, that was the 2 years leading up into an election. I would expect the same thing to happen in 2022, the end of 2022, 2023, and 2024 leading up into that election, just focusing on the time component as well. As that happens, you'll start to see that the oscillators will revert to mean, or the 0 line. And that's kind of where we are now. And we even have this divergence. So the low here and the low here, we've got a lower momentum, even though we have a higher price. So that's a bearish divergence. That's definitely a win for the bears. But the point I'm trying to make is that, come April, March, if this thing has still not broken the 20, that's probably all she's got. And that will be the time to start scaling out of some longs. Ultimately, if she breaks below the 40, if she breaks below the 20, both of those are levels that you need to watch. The 40 on the weekly and the monthly 10 are basically the same level, that 440 level we talked about. So just keep an eye on those levels. All I can tell you is this is as bull as it gets. So You zoom into the daily and see a similar picture, still the ascending channel. But it's getting narrower and narrower. You do have a beautiful cup handle, or just whatever you want to call this, a correction after an uptrend. Correct, base, balance, collect shares, and then move higher again. And that's basically what's happened for the last year. So I'm not going to try to tell everyone that it's anything other than it is. It's an ascending channel. Forget whether or not she's above or below these moving averages. That's literally been the trick. Hey, she closed below the 100, the 80, the 40, the 50, yada, yada, yada. That ultimately was the best buy. So, just remember these moving averages are really like, you can draw a band around the middle. That's what the Bollinger Band does. And what they will tell you is really the direction and of this overall trend. And you can see it's just as bullish as it gets. So ignore the noise, buy the dip. If you can't find the leaders or the stocks that are going up faster than S&P, i.e. the ones with relative strength, if you can't identify that, then just buy SPY. There's nothing wrong with this. I mean, the thing was up 20% plus in 2021. If your account was not up 20% plus, then you need to second guess your strategy. Okay, so that's enough of that. I'm looking for dips into 467 this week. Those will be bought. They could even close below the 40, and that would also be okay with me as long as they stayed above this trend line, and certainly this trend line here. Once you start to get below this level here, basically by January 12th, if as long as they're above 455, everything's fine. If they start getting below 455 by then, what's likely to happen is they'll come into the 200, which would be a strong buy. No problems there, but you really don't want to break this trend line. So that's what we'll be watching for as we open the week. As I go into IWM, a little less clarity here. It's getting a little congested, so let's remove some of this stuff. Certainly a bull flag pattern, and as price came down into that 209.05 level that we've talked about for a long time, it was the monthly high or low right here from July. As price came into that level, you got a look below and fail, right? Price went below for about an hour, recaptured, closed above, and never looked back. Went right back to the POC, going back to, I think, the 2020 low. Yeah, it's all the way up here at 222. So that 222 level has been the level to watch. And what's interesting is like price is not allowed to get too far away from it. So just keep that in mind. Again, like people love to think, well, hey, we're above the moving average, therefore it's a bull market, or below it, it's a bear market. It's not exactly how it works. It's more of just a trend or an idea of, mean. And then as, you get more noise, right, more data, price will get further away from mean. And ultimately what happens over time is that price reverts back to mean. That's ultimately what I'm looking for, is mean reversion. And especially when things are range bound. When they're trending higher, you don't revert back to mean as often. And things like SMA 10 will be more used. But in this particular instance, you'll see, hey, like we were way above all the moving averages, but in fact we were at the most risk. And hey, we were below all the moving averages, and we were in fact at the most risk for shorts, right? So just because we're above or we're below, or hey, the moving averages have this brand new bull market look, and look, they're separating up. Well, that was actually just a trap. Or hey, look, this looks like a bear market look. The 10 crosses below the 200. Hey, what's happening here? To be honest, these moving averages have provided you little to no help going back to March. right? You could almost take them off the chart and really just trade the range, which means I'm looking for gaps, I'm looking for highs and lows of engulfing candles, outside candles, candles with high volume, etc. And then we're going to build a strategy around that. As you can see, like this candle here with the highest volume, it's an engulfing outside candle. And the high of that candle is 224.21. You could put a horizontal line there. We've never really got above that line, right? So they've been distributing shares at that level going back to December 1, the whole month. And what's very interesting is they start the month, right? Like, tell me this wasn't planned. They start the month, end November 30th, start December 1st. They gap up, close at the low on the day, go inside basically the whole month, and end at the high where they gapped up to. It's really funny. So they're collecting, they're carving out this space, they're accumulating or distributing. I don't really know. We'll find out over time. It's definitely a chart you can't ignore. When you get a monthly look like this, the move that comes after this is going to be very important, right? So you can't get in the way if it's bull or bear. Just hop on the wave. So there's two ways to trade this. The breakout trader who bought up here above 235, yeah, that's not my system. That's not the way I do it. I'm happy to play breakouts, but I recognize they fail more than they don't. And as a result, you got this look above and fail, brought price all the way back down to the 209, gave you the look below and fail, ended the month with almost a perfect doji, as I was mentioning before, right where they started the month, almost as if highly calculated. And now we start the new year, the January effect. Mainly the stocks inside here that have been beaten up, these are the ones you kind of want to see for January if they have any type of move. That being said, I'm not expecting much from this ETF. And when I look at the weekly chart, we can't get back above all these moving averages. Again, I told you they don't mean anything, right? We're range bound. What matters more is the oscillator and less the actual moving average. But we can't get back above this 225 level. And when you zoom all the way into the daily, you can see we broke the trend. This is definitely a downtrend that we broke. That's great. But there's no uptrend. And so what needs to happen is, this to me looks like an ABC in the making. Come back down into this gap at 220, 33. Tag the 20, tag the 10. Find demand and launch higher from here. And if they don't do that, what's going to happen is you're going to get the inverted head and shoulders look with your left shoulder, and what we're looking for is the right shoulder to come all the way back down to here, 214, maybe by the end of the first week of January. And again, what that would do is, put a huge emphasis like, hey, is this another lower high, lower low, lower high? Are we just continuing this downtrend that started at the beginning of November? And if that's the case, it's certainly not matching what we're seeing in some of these other sectors, but it is matching what we're seeing in IYT, which is the transports, right? SMH, QQQ, SPY, all looking very, very strong. New highs, etc. Where IYT, IWM, all the highs have been sold, and even since the beginning of November in the transports, you've got lower highs. So have we just, essentially had a distribution for all of 2020, and our two crappiest sectors, IYT and IWM, are telling you that? I don't know. We're going to have to see. I will say I like the look of this a lot, but you still have this negative divergence. And really, this is kind of your big cup, big base that they're building here on the weekly or monthly time frame to launch from. The monthly PPO looks okay, but as we were looking at some of these other charts like SPY monthly, we can't get above, right? So like to me, this looks like, a high back here of $90, a high right here of 170, and a high right here of 280, all on lower momentum. Well, that's not the structure you want to see. It's telling me that whatever happened, this was wave 3, and that this is some final wave 5 move. We'll have to see in time. The weekly is telling me that there's certainly the possibility that there's still an uptrend. They saved the blue line. They saved all these shorter term moving averages. But reality is, if you're below my blue line, it's not a good look. And that's my simple moving average 40. You want to be above that. You want that line to be sloping up. And it is here. And this is fine. And this is a huge consolidation range. And they're balancing and they're collecting or distributing, whatever you want to call it. And if ultimately they can break above 280, it unlocks 325. And in that instance, you'll see IWM, you'll see IYT, you'll see all the small caps, all the rail, all that junk that no one likes, that's been beaten up for the last 9 to 10 months. You'll see that start to run. But until that happens, all that stuff's going to be range bound. And it's the same thing with IWM. So I'm not going to talk too much about that anymore, but that's where we are. It's a little less clear than SMH and QQQ, which to me are sells. So if I look at SMH on the weekly, we had our 40 tag. We have an impulse move higher. 1, 2, 3, 4, 5, 6, 7, 8 candles later, we get the start of the correction. 1, 2, 3, 4, 5, 6. So we should get a couple more candles to tell us that this is over. And when I start to look at the structure, I see an A, I see a B, looking for a C here. Maybe it already completed, right? A, B, C, which would be super, super bullish. And SMH is super bullish. What can I tell you? But this 1, 2, 3, 4, I don't know any other way to look at it. It's a bit long in the tooth. Okay, the trade war. Now the chip shortage, right? What will be next to justify the 1,000% increase in price going back 3 years? Or okay, a bit exaggerated. 5 years. So yeah, there's definitely this is the strongest ETF. But if you go look at the monthly, you'll start to see like, hey, this had a massive period of underperformance following the collapse, right? The dot-com bust. And even coming into 2008, it created a lower low. So this to me is a bit concerning, right? 14 to 300 in a decade on an ETF is a hell of a run. I don't really see an ABC correction. I don't see a zigzag anywhere on this chart except right here. One little zigzag. Everything else is essentially a higher low or a flat where they just break it and recapture. And, I start to now see a 20 PPO on the monthly that's crossed bear, and this fully extended look from the 20. We haven't touched the 20 since the 2020 crash. And coming off here, 1, 2, 3, 4, 5. I mean, I see a 5-wave move on the monthly. This one scares me a bit. I don't know how it's going to play out. So when I zoom into the daily, I start to see even more of this bearish divergence. And I do see what looks like a little bit of distribution here, right? A big move up going sideways. We'd want to see a decline back into the previous base. So like the 270 level, until we get back there, it's kind of hard to justify buying this. And they've tagged the 40 so many times that this isn't really a buy anymore. And you look at the weekly chart, this is a pretty nasty candle. And all of the volume is red distribution, right? We have a nice peak here, going back to the 2020 lows, 95 to 320 in a year and a half. I mean, that's a hell of a move for an ETF. It's an ETF, 230%. So at some point, this thing's got to take a breather, and it will align with the fundamentals. I do think as the economy gets fixed, the supply chain issues get fixed, I think that this unwinds. This is wound up, and as a result, all the leaders within it, NVIDIA, have all been wound up too. And when I look at these charts, I mean, holy cow, look how extended this thing is. And you look at the momentum here, divergence the whole way on the monthly, divergence on the weekly, bearish cross, loss of the 10. And when you zoom in, I mean, when was the last zigzag, right? They haven't had a zigzag. I don't know why that can't happen and still be very healthy. Come back down to this base. I mean, this volume here at 311, they're not just going to waltz above 311. All right. And this posture is not, this is telling me that either A, it's going to come down and tag the 20 again, and then we'll launch from there. Or B, we've already hit the 20 so many times that we're going to the 40. Either way, I'm not a buyer until above 311.60. The one that I like a little bit better is MU, but similar problem here. And if you go look at a monthly chart on MU, this is the 2000 high. So if this is some triple top here at 97.50, okay. But it could also be a huge breakout. Any acceptance above $100 on MU is going to be a really big deal. So this is a chart to watch, and the weekly PPO is telling me that she could flag here, could put in a handle, could come all the way back down to 80. But those are the dips that you probably want to be looking to buy, not sell. The daily is showing me that this divergence and this recent move, 64 to 90, is telling me we're going to get a pullback here. How low? I don't know. 87 is the first spot, and then 80 is the second spot. So keep an eye on MU. I really like Penn. I got the weekly buy signal on Penn to close out the week. Let's get rid of this off the chart. And I really like how this is a doji at the blue line on the 40. The PPO has reset from 40 to 12. It can certainly keep going and go sideways down here. I am okay with that. Any dip into $36 to $40 is a strong buy. The weekly chart captured EMA 5. We like to see that. Histogram curling up. A doji at the 200. So all of this is good. What is still very bearish is the SMA 10 slope. So she's got to get above this. Otherwise, she's just going to come all the way back down and test the low, put in a double bottom, which would be perfectly normal and acceptable. Now let's look at the daily to get some more clues. Well, the daily tagged the 40, but this looks like an inverse head and shoulders pattern. And if she can somehow stay above $52, which kind of looks like is happening, then you'll have a target of around 65. And again, if we're at 65, we're above the 10. We're all the way back up here. What's at 65? A declining SMA 20. So wouldn't that make sense? $86 to $43. Then they do a retrace of this move back to mean average. That's what we're doing. We're trading around the concept that price reverts to mean and is in either an uptrend or a downtrend. And I am arguing that Penn is still in a long-term uptrend. There's nothing wrong with this chart. This pullback was to be expected. The move of 3 to 140 was insane. It was absolutely impulsive, and is what provides the opportunity for 2022. I remember coming into 2021 and everyone was bullish on Penn. They thought Penn was going to be the stock to own in 2022, and it did nothing in 2022. It was the worst performing stock in the S&P. Now everyone's coming into 2022 saying, wow, at the S&P 500, look how well it's doing, and look how bad Penn is doing. So it's the exact psychology you want to see. The inverse was true at the start of 2021. She wasn't even in the S&P 500. Right? She was in the Russell. They upgraded her to the S&P 500. They sold her off the entire year. So if this industry isn't going away, which I don't think it is, then this sector in space could be a great opportunity for 2022, especially Q1, as the Super Bowl betting comes, as baseball starts back up. There'll be a lot more opportunities to bet. So it's definitely one to keep an eye on. EXC is another one I like. I really like the look of this weekly monthly chart. Is this a big cup and handle? It certainly could be. This PPO on the monthly is supporting that. So we want to watch for the start of this year. Does price stay above $50? If it does, then it certainly can be attracted to 80 to 90. That's the setup. I think that's a very clean swing trade. A bit extended right now. I'm not, you can't go out and buy January 1. You got to watch this one for a pullback. And as you can see here, the daily's already launched again. So we had our pullback in December, and they ended the month at the high. Right? What's that telling me? That they're buying this at any price in 2021, and they ended basically at the high on the year. So betting that she's going to go higher in Q1 in January isn't, it's a very high probability bet. Okay. So it's another name to watch. Some names I'm looking at, but aren't really there yet. Like I still like ENPH, still in a downtrend, not there yet. Honestly, 143 certainly could come into play. Twitter, this one's going to be interesting. If they lose this 40, which on the monthly, I love buying it at the blue line. I love it, especially when the blue line's sloping up and it's, at some other trend line. That being said, we don't have a reversal yet on this chart. The weekly still looks like a bear flag, and the daily is kind of confirming that. So you got to be very, very careful. One other chart I do want to cover before we end is Bitcoin. So this little double bottom off this big wick, I think is the same play here. So as long as she's above 41,634, it's fine, even if this trend line here breaks. Okay. I expect that to happen. That's what's going to create more fear. And then I expect price to come back to this double bottom. All right. If this double bottom's lost, 41,634, this large wick, if they get below this for 10 minutes, not a problem. If they get below it for a day, a week, price is going to go to 35, 33K first, but ultimately down here in what could be an expanding range. All right. And so this is just one to keep an eye on. And the monthly is confirming this. PPO's facing straight down. It's definitely possible. This 1, 2, 3, wave 3 high right now on Bitcoin. So it's not something I'm interested in playing at the moment, right? We've got to see this either get down here, like I was saying, as the 200 moves up on the weekly, that 28K, 27K, like this is what I'm looking at, this level here. If by March, right? They couldn't break above, so that took the high side off the table. The fact that they're staying below the 66K number means that this 41K is likely, and if they stay above the 41K, they can oscillate around here until momentum returns. That being the case, everyone's still too bullish. This move from 3K to 64K has had some retracement, but I'm not. The psychology is not ready. Yeah, it just isn't. Take a look at XLF, range bound, but this range is going to break by OpEx, and they've already tagged the 40, so there's no reason for them to come back down here. If they come back down here, I highly doubt that they stay above. And this is kind of what I want to just point out, right? This is how you need to look at these charts. This was the all-time high that started the correction. Look, the PPO curled, crossed, etc. Right? Was at 7, now back to 1. So correction started. All of this is corrective. All of it is corrective. Doesn't mean you can't trade it. It just means it's corrective. What we want to see is the next impulse move out of here. Is that going to start from here? It certainly could. No reason it can't. Putting in something like maybe something like this. Running flat, expanding flat, I don't know. Or is this just some triangle and it's completed and now we put in a wave 1? I don't really know. But I will say when I look at the monthly on XLF, all right, this is very, very bullish. Staying above 31 is exactly what you want to see. The PPO is confirming this. This is your reset, right? Historic low. We are now above all of that, and the momentum is confirming it. It's not on a divergence. And we have that confirmation in the February 2018 high relative to the December high. So this to me looks like a wave 3, meaning any pullbacks into the 20, which is currently at 32, and certainly 31, 30 are all for buying. But here's the jig. She's still above the 10. So there's no reason to think that lower prices are coming. And that's a bullish candle. And this is bullish momentum. All of this is telling me the odds favor SMA 10 remaining demand, and that trend, this momentum precedes the price. The same thing that happens here, this thrust, the same thrust that you get back here. When you get these large thrusts after resetting to 0, it doesn't necessarily mean when you get the curl, you just go and we're going to crash. No, you can curl and still go higher. And that's likely what's going to happen here. We'll pull back and still go higher. And as long as she stays above 30, she can hit 55 in the next couple years. Now, this is a monthly chart. Will take a long time to play out. We'll see how it works. I think that pretty much covers the charts that I wanted to focus on. Some honorable mentions that I just aren't ready yet. I don't see this as ready yet. We did get the doji on the monthly. So inside doji, this is a harami pattern, bullish harami on the monthly, but I have nothing here on the weekly to support it yet. Obviously a bear flag. And when you zoom all the way into the daily, it's confirmed, right? So what they're building energy for is another move. Is it going to be something like this? Or is this energy going to get reversed and we're going to come all the way back up and start filling some of these gaps in what would be something like this? I don't know. We'll see. It's going to go to the way of the market. That being said, I hope you enjoyed the video. If you like the content, hit the subscribe button. Check us out on Twitter or YouTube, and I'll see you in the next video.